Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar begin to ease back a bit from an area that we had pointed out for our bias chart is going to be in this 96.92 area here. You can see on the cash dollar index, and that's our bias. Actually, looking over here on the gold, let's pop it here into the dollar index. Right here into this 96.92. That's what we have listed here is our bias chart resistance. Right there, and this is where we're having a little bit of trouble right here, right there at 96.92, and we got above it, and we actually worked a little bit higher even in Asia, but we're starting to back off a little bit and starting to dip a little bit here against that 96.92, and then correspondingly we're going to see the euro. We talked about this. We mentioned this level in Asia. Everybody was getting into the RBNZ. But as we dip lower here, the euro dollar didn't drop right off. I think it was trading at about 1262-ish or 1260, and then I said, hey, watch out for this 1252. It's 1253, but we dipped just a little bit lower. You can see we've seen a decent little bit of a recovery as the dollar index begins to slide back here. I don't think we had that as that low in our bias chart resistance. I think we only had 1279. It tried to hold that area, but later on in the day we started to keep working a little bit lower initially. You can see here. Let's pull this back. Right in here, we were holding, trying to make a stab here, but we had got as low as 1270, and we had 1279 and kind of held that area, and then finally later on in the Asia we started sliding a little bit lower. When we also taking a look here at the gold market, we're still keeping our overall bid tone here. We're still looking, eventually we had 1323, and the lower end was only going to be the let's see right here, the 04 here. I actually had put in here at 1309 because we're still doing pretty well, but we're still looking for a little bit higher eventually, and we think that per Asian analysis from this weekend that we can still go back there and challenge those highs around the 1342-ish area. The peso continues to go and rebound from here. We'd taken a dip, and we had actually had that 1902 holding that area here for the peso right here. And but we're starting to work a little bit higher after this recovery from last Friday. We jumped back. We came back for a little bit of support down here, but we're actually making a move higher. And the real resistance, as we had mentioned before, it's going to come at 1918. This 1918 is a 50% now. If we did spend a little bit more time here at this 1902, but eventually I think we can make it up here right around 1930-ish, and then I think we'll see some value selling at that point. But we've done some yield moments work here after the rebound down here at this 1902 one. But look around this 1918.6, 1918.4 is a 50% of this move, and then as well we have this resistance coming in right here. Dollar CAD continues to stay a little bit on the weak side. One of the things we mentioned in the chat room yesterday was this 34.12 being the 50%. And I thought I was going to have a tough time trying to get beyond that. It certainly tried to push a little bit higher here, but with crude moving higher at the time, I thought I was going to have a tough time trying to get beyond that 34.12. Now, I did slide back, but it's not like as if the wheels came off the caboose or anything like that. But we're looking for really a move down here on the 33.50s here. But let's see what crude eventually does here. Speaking of crude, we're still holding up pretty steady up in these highs here with crude oil. And moving on to cable. We've worked a little bit lower, but we're still stuck in a relatively tight range here with cable. We're going to see how that eventually resolves. And with the dollar yen, we did get that to poke higher. Remember, we mentioned that 1040-ish here, and we even got beyond that. And we had mentioned later on about this 1063. I think we had this here as our bias chart, 1063. That just happens to coincide with the 38% of the move. I thought we might be able to work a little bit higher, goose them just a little bit higher, hoping that we can push just a little bit higher here. Did take a little bit of a short and scalped out, but really not anything of any real significance because I thought we'd see a little bit better follow through. But we're holding up very, very well, so I'm hoping they might just be able to jump up a little bit higher. We'll see what happens. With that, we'll just go on and move into the news. Says the morning bid, Brexit multiple choice, a test for Parliament. UK Parliament takes control of Brexit for a few hours today to see if it can do what Theresa May has so far singularly failed to do, find a way out of the stalemate. House of Speaker John Bercow is expected to submit to vote this evening around half a dozen of the 16 or so ideas that have been floated, with lawmakers able to give their assent to none or several of the other options on the ballot card. They range from hard Brexit variants right through to a Norway-style choice association with the EU, including the possibility of any deal then being put to a new referendum. Even with just a few hours to go before the voting kicks off, it's not entirely clear how free it will be, with various forms of the party and government pressure being applied to lawmakers. Whatever happens, a runoff between the most popular options is scheduled for Monday. Before that, however, May will be hoping she can finally squeeze through her own deal as early as tomorrow. I mean, oh my God, this thing just keeps dragging on and on and on. Hard Brexiters Jacob Rees-Mogg and Boris Johnson are dropping hints that they could reluctantly back it, although she is still lacking support from their fellow Eurosceptics and the Northern Irish DUP. The team is widely tipped later today to offer a date for her resignation and a last-ditch compromise to get the deal over the line. ECB President Mario Draghi's opening speech at the ECB Watchers event in Frankfurt today will be closely watched in light of the persistent evidence of weakness in the Eurozone economy. Given the context, it would be a surprise if he were to stray away from the dovish tone of his recent remarks. Just as interesting will be how he frames the challenges ahead, including the question of what sort of future the firepower the bank can be drawn on. After rising on Tuesday, world stock markets hesitant again, first saying as the growth jitters continue to emanate from the bond markets, economic data underwhelmed. Brexit tensions persisted, and developments in Argentina, Turkey, and other emerging markets rattled investors. The S&P 500 closed up 0.7% higher later Tuesday, but there was little follow-through overnight, following the sub-forecast U.S. consumer confidence and house building numbers. The recent inversion of the U.S. 3-month to 10-year yield curve for the first time in almost 12 years increased to as much as 7 basis points. In Europe, German 10-year bond yields fell to new 2.5-year lows below zero, almost minus 4 basis points. Ahead of a speech this morning by ECB's Draghi, Eurodollar was also ahead of Draghi's speech, trading as low as 12.45, first saying. Asian stock markets were mixed, with the Shanghai and the HK outperforming. On currency markets, the dollar index was higher for the fourth straight day, with New Zealand's dollar, the big overnight mover, falling to 2-week lows on surprise signals from the Reserve Bank that the next move in local interest rates could be lower. Sterling was a fraction lower against the dollar, slipping below 132 with tonight's so-called indicative votes in the UK Parliament on how to break the Brexit impasse. And let's just go on and wrap up the rest of the news to be rather quickly. With the Canadian dollar strengthening as calm returns to the global bond markets, it seems to be similar to what we have seen recently, where risk appetite has been driving the loony, said Eric Nelson, a currency strategist at Wells Fargo. Price of oil, one of Canada's major exporters, rose as attention centered on geopolitical factors, tightening supplies that are heading to falling exports from Venezuela and declining U.S. inventory. The loonie rose despite news that China had expanded its ban on Canadian canola imports to include shipments from Viterra. The ban is the latest development in a wider trade dispute between the two countries that could weigh on Canada's economy. On to the New Zealand dollar, kneecapped as the central bank talks rate cuts. The New Zealand dollar took a tumble on Wednesday after the country's central bank blindsided markets by saying the next move in interest rates would likely be down, abandoning its long-standing neutral stance. The Kiwi dived 1.5% to a 2-week low of 68, while bond and bill futures rallied sharply. The Australian dollar was dragged down its wake, with the RBNZ keeping the official cash rate at 1.75 as expected. It surprised many by flatly stating the move more likely direction of our next OCR move is down. The central bank cited a global outlook, particularly in major trading partners Australia, Europe, and China. This weaker outlook has prompted central banks to ease their expected monetary policy stances, placing upward pressure on the New Zealand dollar, the RBNZ said. The RBNZ has clearly changed tack today, focusing on the negative and downgrading the positive, said Jeremy Couchman, economist at Kiwi Bank. We now expect a 25 basis point cut in May, followed by another cut in August, largely depending on the performing currency. The dovish shift, similarly moves by central banks abroad, will only add to speculation that the RBA will have to ease policy at some point. The RBA holds its April policy meeting next week and might now choose to at least sound dovish in order to stop the Aussie dollar from rising. That continued dovish shift by G7 central banks ongoing, supported by Chinese authorities, and today's move by the RBNZ will keep pressure on the RBA to also move in the same direction, however reluctantly. It's essentially a global policy cycle. Investors reacted by aggressively narrowing the odds on easing with a quarter-point cut in the 1.5% cash rate, now fully priced in by August instead of September. And as far as the ECB can delay rate hike again if needed, says Draghi, the Eurozone is facing a more persistent deterioration of external demand. Amid the European Central Bank stands ready to further delay a planned interest rate hike if necessary. Just as we did at our March meeting, we would ensure the monetary policy continues to accompany the economy is adjusting our rate forward guidance to reflect the new inflation outlook, Draghi told the conference. And lastly, on the dollar eases up as the Kiwi slides as RBNZ flags possible rate cut. The dollar edged higher on Wednesday, and the Antipodean currencies beat a hasty retreat after the RBNZ surprised the market by opening the door for future monetary policy easing. The Kiwi is down 1.5% at 68.03. The Aussie dollar retreated in sympathy with New Zealand dollar peers shedding 0.4%. Industrialized nations are seemingly in a rush to adopt a dovish policy stance, and New Zealand's central bank has just joined them. In addition to the Kiwis' fall, the drop by the Aussie is also eye-catching, said Ayoko Sera. The U.S. Federal Reserve last week bought its 3-year drive to tighten monetary policy to an abrupt end, abandoning projections for any interest rate hikes. The ECB, RBA, BOJ have also taken a dovish tilt this year. The greenback was already on firm footing early on Tuesday when the 10-year Treasury debt yields rebounded. Bids for the dollar returning from Treasury yields off their lows, with also because negative news towards the European economy have done so favors of the currency. An inversion of the U.S. yield, which has preceded every U.S. recession over the past 50 years, showed risk sentiment and triggered a sharp stock sell-off last week. The euro lost 1/10 to 12.55 and extending overnight losses. The currency's been on shaky ground after Friday's weaker than expected German manufacturing survey raised concerns. Sterling drew mild support after Eurosceptic British lawmakers indicated on Tuesday they might agree to support PMA's withdrawal deal rather than risk a parliament canceling Brexit. So with that, we're going to move into the bias chart. Now, the euro is trying to hold its own at these lower levels, and certainly after the failure last week of the breakout, we've actually opened the door to move lower, and that's how we start out the week. On a short-term basis, where do we stand here? Let's go and move into the 2-hour chart. Well, we're trying to see if we can put a little bit of a bottom in here, and at least for now, and certainly the tilt is lower. That's it. That's the case right now. But where can we find some additional support? If we're going to find that here and try and make a stand, and we actually came right into it right here. You can see that coming here is 1247, right there. It's actually 1247, and that's actually the low right here. So that will actually be our bias chart support here. And for resistance, we certainly have this market under some pretty good pressure, and resistance is going to come in right there at 1297. 1297 for resistance. And of course maintains its bearish tilt. Moving on to the cable, which has stayed in a relatively tight range. We had mentioned this yesterday, and that kind of kept the market in tow, which was this 32.65. We got up as high yesterday as 32.61. Here's where we had that 32.65. You know, right now, I think we're just trapped and mired in this range, and I think we're going to have to go on and stay with these ranges. So for right now, it's going to be the 32.65 we mentioned before, and on the downside, right there at 31.42. No changes here. We'll lower this here. I want to be low. And just tighten it up here. Obviously, a big mover was here with the Aussie. Really, it was the Kiwi, but the Aussie certainly felt its impact. And the thought is that the RBA is going to have to fall into line, so to speak, here. And so the resistance would be looking at right there at 71.34. Let's look at a 2-hour chart. And we certainly think we're looking actually for a move of 68. Remember, we did the Asian analysis. We're looking for a move to 68.90. Resistance at this point. I thought that was a little bit too high, but let's see. It's going to have to be the 71.42. When I was looking on the daily, it showed here 71.35, but we'll give it here at 71.42. Same thing we had at 45. We'll just go and keep it right there. And support on this break here. And I think there's a good possibility we can make that break. It's going to come in right there. It's initially, well, actually go straight down here at 70.53. But I think that eventually we will go in and break into that 68.90. But it's going to be 70.53. I think this market is quite susceptible. And let's go and move into the Canadian dollar. Now, this market has held up relatively well. I mean, if you consider where crude is, it has held up well. I thought we might have, by Asia, we may have taken this dip into the 3350s, but we're still holding up very well here, especially when you consider, as I mentioned, how well crude's still holding up. I would have thought that after being incapable of taking out in the chat room yesterday, we were talking about this 3412 being the 50% of this area, and I thought I was going to have a tough time trying to get beyond that. And tough time it did, but it didn't turn around and just immediately give it up. But even on the slide back, we didn't, come down as far as I thought we would have. And I was looking for a move, and I point out later, I thought that in Asia, we may be able to come down here to right around this 33.45. And I think that's a really decent entry. The only problem that I've got now is that we've hung around so long up here, and I was thinking that we flush out some late bulls, but we'll go with this 33.45. But really, we can go as low as here as 33.38. It's all dependent on crude oil. If crude oil makes another pop back up to the 60, I think we can get as low as 33.38. But for right now, we'll go with 33.45. On the upside, on a short-term basis, is going to be right there, 34.04. Very short-term basis, 34.04. The key one is actually 34.12. That's going to be like the trigger point here. If we can get beyond that, I guess we'll just keep this. We're going to put this 34.12 here, because if we do get a dip back in crude oil, we're going to come back here and challenge this above 34. But the real driving point is going to be there. We'll actually call it 34.14. That'll be the trigger for a higher move. On tap, we have the dollar peso, and let's go and take a look at this. Here's that 50% move that we talked about. It actually comes in at, I think it's 19 point, or let me see, it's not, hang on one moment, we'll pull this up here. Yeah, 19.184. So we're not that far, and that's coinciding or confluence with 19.186. So we see that as your initial area of resistance here on this move. Now, my thoughts is that, anyways, we did with the Asian analysis at the beginning of the week is, I think we can still make a move higher and actually come all the way up here right into this 1931.86. I think once you get into this area here, that's right there you'll see some value selling, and value selling in the sense that I think you would see longs take some profits, and we probably have to come back down and test close to this 19.186. But I think that potentially we can go and make that move up here to the 1930. But watch this 19.186. And remember, 19.184 is going to be the 50%. Now, as far as support, it's going to come in right there. You can see that. 19.105. That'll be support. This 1902 worked out very well over the last couple of days. And with that, let's go on and move right into the crude oil. God, it seems like this crude does want to make this pop up in here. Which could take it up to 61.39. Let's take a look at this move. We're just at that 50%. And people have been taking, shorts here, and they were able to grab almost a couple of dollars here. But this market sure acts like, from a daily point of view, it wants to get up here to 61.39. Right here, we're so close, unless we get some bad data. It appears they'd want to go in goosey stops, and that would be just enough of a stop to clean some people out and make a run up here to 61.39. Seems like we could even go up as high as about 61.76. To me, it's been amazing that it's been able to stay at this height with all the concerns about global growth. Of course, we've had the supply issues coming out of Venezuela, but you got to think that anyone that's short is just thinking, well, they're going to go in and trigger those stops. Resistance on a very short-term basis comes in at 59.95, and we're not that far away. And this might be, if we can trigger those stops, it will be what can knock this dollar CAD a little bit lower here. I have to think, at least for now, the highs have got it right here. The highs are going to have to be the resistance right here at 60.12. But this market is acting like it wants to go in and break higher. If nothing else, just to go in and blow out any shorts here. And not that bad. I mean, I think, like I said, potential we can make it up to 61. Well, looking for 61.39, maybe a stretch up here to 61.76. But honestly, I don't know how it's been able to maintain this other than supply issues and some drawdowns, but it has been able to maintain it. Support now. Is 59.06. And actually, if you look a little bit lower here, yeah, 58.95. And let's go move into the dollar yen. This is a nice little rebound off of this 977. We're still looking for a test to the pivot of 927, but in the short haul, with rates going, I think it was due a bounce, but I think we can push a little bit hard. Actually, I think we can make it up here potentially to this 1087, and we'll take a look at it on the 2-hour chart. We did make it up here. We're looking for 1063. We made it and got just a little bit beyond that. But I think we could just squeeze this thing a little bit higher, and here comes in this 1087. Call it right there. Right there. So I'm going to go with the 1087, thinking that they could go in and trigger some stops. Look, we've put in right in here, the market's having a tough trying to break lower. In Asia, we dipped real quick to about right here at this 40, and then we quickly bounced up. I mean, it looked like the market was going to really start to slide. And by the time we hit down here towards the 40, we quickly jumped up about 14 pips, which doesn't say a whole lot. But I mean, we haven't been able to pull back. We're still holding here now. It just looks like they're just seeing if they can go and trigger some very short-term stops, but I think that would come up here toward this 1087. So we're actually going to list this as our resistance. Support. We're going to go with 1032 for the support. We saw the Aussie Yen finally come off a little bit. 79.02 was a 61% of this move, and we saw this market, make a nice little protracted dip here. We had our bias chart support here, as low as 78.20. Kind of mixed bag it a little bit. We're going to go in and keep that 78.20, and then on the upside, we're going to go with 78. Just move that just a bit higher. I don't know if they could even make it up this high, but we're going to go right there at 78. You can basically look as a risk area here, 78.88. But really, some good supply should come in around that 78.80. Not that high, though, not that high from here. So let's just go on as a risk standpoint from 78.88. And we're going to go and keep the 78.20. Other than just stretching some of these areas here, I'm not seeing anything of any real significance here. Nice little move down here, after that RBNZ, we put the pressure, the Aussie under pressure, but other than testing these ranges, the market hasn't reacted that much. I mean, we've been on the bid when the S&Ps move higher, but it's not like as if we've stretched areas. We've just kind of, as far as pushing stops, we've just kind of stretched some of these levels here, and that's about it. Let's go and move in now to the dollar index. Now we had 96.92 as our resistance. We thought we'd make a move in time to the 96.92 area. Well, that's what we ended up going to, 96.92, and we added just a little bit beyond that. Okay, we were actually, remember yesterday we were talking about looking at the daily, because we had 96.81. And we're saying, hey, look, that's key if we could get a daily close, but the resistance is going to go on and come in at 96.92. We thought it'd be a big deal if it could close above 96.81, and we did not. We came close to it, but the real resistance, as I mentioned before, it was going to be key from a closing standpoint if we could get above 96.81. But the key was going to be, the real resistance was going to be 96.92. And 96.92 is where we close at. Now, once again, you're going to be watching today. Can it close above 96.81? It's a key area here. There we go. But as we mentioned, the real resistance came in, and that's what we had for our bias chart, 96.92. Well, the same thing with the euro. If we test a little bit lower, look, 96.92, that's the key. How much further could we stretch it if the dollar gets a little bit more into it? It's going to come in right there at 97.06. But I like this 96.92. That's the key level. And that will be the resistance as far as the 2-hour close. Can we stretch a little bit higher if they give it a little bit of extra juice? Yeah, you can go up as high as 97.06. So my point being is we'd have to get beyond 97.06 to say, wow, we got some further legs to go here on the dollar. So can we stretch and take out today's highs? Yeah, we can, but don't fall in love with it unless we start making a move beyond 97.06. So we'll go and put that as our resistance, but the key is on a 2-hour close at 96.92. Matter of fact, I'm going to put it like this. And remember, on the daily, it's about that closing at 96.81. And we mentioned this yesterday, but the resistance we said would come in at 92. But the key here on a daily close is 96.81 for further upside. And as we pointed out here, we got up to it, but we couldn't close above 81. And so here we are, we're pressing against beyond it. But the key will be, can we close above 81? So pretty key areas here, right, for the cash dollar index. I mean, if we push the new highs, I wouldn't fall in love with this unless we get above 97.06. We start to move beyond that. Then you're saying, wow, we're gonna get a further move. But can we push these highs? Yeah, but the stretch would be the 06. What you'll be looking for at the end of the day is, can we get a close above 96.81? If we don't, and we just kind of languish in here, it really opens the door that we may have some bulls start to say, you know, I'll take some profits, and then we could see this thing pare back a little bit further. Support's going to come in there at 96.31. Maybe that just a bit higher. With that, let's go and move into the gold market. Well, this market's kept a fairly good bid, and we talked about, you know, on the Asian analysis to the start of the week, how the market finished last week on its highest level when it closed, the highest close of the week. And we'll continue to see this upside move, and I think that in time, as we were saying in the Asian analysis, I think we can challenge this high up here at 1341 in time. Now, we're not going gangbusters, and we did go to our resistance, which is going to be 1323 the last couple of days. But that being said, it's not like we're seeing any kind of dramatic sell-off or anything like that. So certainly suggests if we were to see continued weakness in the equities, obviously we're getting a decent little rebound and hanging on up there, then we can probably see this thing break out, finally get up to the 41. So for right now, 1323 is going to remain the resistance, and we're going to keep the 1309 as a support here with the gold. But overall, I think that in time, if we see these S&Ps pull back, I think we can see this make a move up here at this 1341. The euro's doing okay here at this 1282, but look at this bund. New highs again. Some good resistance right here on a closing basis at 6807. I call it 6809, and really all the way up in here. And we're certainly trying to make a break up in here. And some huge resistance to 6845. That would be 6830. Well, let's go with the 6809, but we're right there essentially. And if this thing really jets, we can get up to 6845. Support's going to come in right there. That even sounds crazy. It almost seems like it's right there. And I was thinking at the 6759, but we've had such huge moves. Look at that. We just took out the 6809. It'd be 6771. And how much further can we push? And you have to wonder if the euro may even start to pare back as bund yields continue to move lower. I want to keep an eye on this. The euro's come off of its lows, but with these bund yields pushing lower, we may end up pulling back a bit here, or a little bit of a drag here on the euro. The DAX stays a decent little recovery as the S&Ps came back. And we had our resistances 11,451. We did make it up as high as what, 11,478? We weren't too far off here. And we're starting to pare back now at 11,403 now. We're actually sliding. You can see here, we're sliding as the bunds continue to move higher. Now 68.12. So you can see that going just the opposite way. Obviously, there's concerns here with growth. Support, we're going to keep it simple right here. It's going to be 11,357 on this level. Look, we're maintaining these highs here in the bunds. It's actually weighing down. You see here now we're still pressing lower here in the DAX. Look at these bunds, new lower rates here, and look at this. We're continuing to push up. Now we can get, and the reason I'm focusing on this because obviously it's impacting the DAX. I don't know how many of y'all are here trading the DAX, but certainly this may weigh as a as a drag here on the euro. We had a resistance of 68.09, but this market can make a run up here to 68.45. And we're looking at that on the daily. You want to keep that in line here with the euro. Look at that, new highs. Look at that, 12, 13, 14. Right now we're right here at almost here at 15. 6.15 now. And look at the DAX. Now it's taking out 400. Look at that 45 here. Just keep a close eye here on this bun. We're trying to push a little bit higher here on the euro, but that bun might work as a bit of a shackle on this. Here's the bias chart. I'll go and get that posted in the room. And good luck trading today.